Hello and welcome to Your Stocks in the Mumbai studio. I'm Sonal Bhutra and the markets today, just taking a look at them yet again, and it's been a stellar rally all across the board. Nifty is up 706 points. It's slightly off the highs, the opening highs that is. There's nothing really to complain. Bank Nifty is outperforming the benchmark today, 3.8% higher on that one, comfortably above that 50,800 mark right now. Mid caps too are doing really well, 3.2% higher. Advance decline ratio in favor of the advances. And what a PSU rally that we are seeing today across the board. PSU names, be it from the oil and gas space, be it from the power space, or be it from the banking space, all the PSUs continue to do really well in trade today. But this is a show where we answer all your stock-specific queries. So let's welcome the guests and the experts on the show. Joining us today is Ruchit Jain, lead research at 5paisa.com, and Parthiv Shah, director at Tracom Stock Brokers, to answer all your queries. Gentlemen, good afternoon. Thank you so much for joining us. And after today, I'm sure there'll be a lot of queries. All the stocks are higher, most of them, I would say. So whether you enter at this time, you exit after making healthy profits, or what should the course be? So let's get started now. Cyril D'Souza writes to us from Mumbai. She holds 14 shares of Adani Enterprises ever since its fall because of Hindenburg issue at price of 2,326 rupees a share. Wants to know whether it is good time to book profit. Parthiv, let me come to you first up. It's one of the big gainers today that we are seeing on the Nifty. The entire Adani pack is doing really well. But what do you suggest the viewers should do? Continue at these levels or book profits?
Good afternoon, Sonal, Ruchit, and our viewers. What a stock to start with, Sonal. It's an obvious one post the exit poll numbers, and the entire pack has been buzzing. We heard about the fact that they've crossed almost 20 lakh crore worth of market cap, surpassing Reliance Industries. And no doubt, I think this has been the company which has been the incubator company for the group. We have seen a lot of businesses being incubated under Adani Enterprise. And if based on the current business segments, if we want to discuss, I think the airport business is something that a lot of investors are looking at. Management has been vocal of unlocking value over the next 2 to 3 years. They have almost 23% market share in terms of airport passenger handling. And not only that, a lot of surplus real estate where the non-aero business can also be scaled up extremely well. Besides this, I think another very big business that is going to pan out is the new energy business, which is the subsidiary ANIL. And a lot of plants, electrolyzers, solar panels, a lot of things that they're doing for green hydrogen foray. And they're not only stopping at that, they're talking of downstream products like green ammonia and things like that. Plus the other subsidiaries, the defense, then there is this coal trading. They are very big mine development operators, and a lot of other businesses are getting incubated. The data center business, we heard about some prospects. They have very good clientele like Microsoft and Amazon. So that is also going to get scaled up. The Kutch copper business, which just started operations, and I think the talks of almost 3,000 crore worth of EBITDA coming up from this business. And by FY29 becoming a 1 million ton copper smelter, I think that is also a business can do extremely well for them with the ecosystem. So our sense, it's a good stock to hold. It's a proxy to the infra play. No doubt the current fortunes in terms of the current rally and the valuations getting re-rated is also due to the sentimental news. But I think all the more reason, this is the type of stock that we would like to suggest to hold for longer price.
Okay, hold for longer, fundamentally, of course. Ruchit, what are the charts suggesting?
Yeah, hi, very good afternoon, Sonal. Very good afternoon to Parthiv and all the viewers. Well, the chart suggests a quite bullish momentum for short to medium term. So I did one good thing is the buying price. I think she had bought at lower levels, so the margin of safety is quite good at even at current levels. And just been forming a high top, high bottom structure. And what we have seen that in the recent declines, the volumes during price corrections were a bit low, and when the prices are going up during this event, it is backed by very high volume. So I think structure looks quite positive. Slowly and gradually, the stock could head high towards its previous highs of 4,100 to 4,200 range. So my advice also would be to continue to hold on and take a review again when the stock comes towards the previous highs of around 4,100.
Okay, so looking good technically and fundamentally. That's Adani Enterprises. So hope that answers the viewer's query. Moving on to the next one. Nikun Shah is writing to us from New Delhi. Holds 100 shares of Paytm since from that level of 662 rupees, and it's half from those levels. Wants to know whether to book his losses or sell at current levels, or hold on and add more position on this one. Parthiv, let me come to you, because there's been a lot of regulatory updates here. Since then, there have been updates in terms of their quarterly earnings, the quarterly updates, operational updates that is. What are you suggesting here? Do you think it's best to stay away from Paytm, or the viewer can add at these levels?
Extremely sorry, Sonal. This is not a stock that we are tracking, so won't be able to comment on this.
Okay, all right. What about you, Ruchit? What are the charts suggesting here?
Certainly not a stock where I would suggest to add more to the positions, because we have seen that even in a trended up move, irrespective of the market trend, the stock has shown a huge underperformance compared to the broader markets, and still there are no signs of a price reversals. There could be some in between pullback moves towards 400, 420 kind of range, but the trend still continues to remain, a major trend still remains on a negative. So I would advise to keep a sell on rise approach, and as we get any kind of such pullback moves, look to lighten up the positions rather than deploying more money in this counter.
Okay, sell on rise, that's the word on Paytm. Moving on now, Shantanu Jain writes to us from Delhi, holds 10 shares of Zomato at 50 rupees a share, wants to know whether to remain invested or exit, or when he can buy more shares. So first up, congratulations, though the quantity is low, so the absolute amount of course is not so high in terms of profits. But Ruchit, let me come to you. What do you suggest here? Chartically, how is Zomato looking?
Is looking quite positive. Post results, we have seen some decline from the highs, but it just seems to be a correction within an uptrend. The stock has been holding around its 100-day exponential moving average in the recent corrections, and right now also it's quite close to that 100 EMA support. So I think the mid to long term trend still remains intact, and any kind of dips near that 160, 165 range should be a good opportunity to add more to the positions. So I think hold on your existing positions around 160, 165. If the stock comes, then look to add over there.
Okay. Parthiv, what about you? This is a stock where there's a lot of interest. When came up with it, the IPO, it was loss-making. Then there have been continuous improvements. Now, Blinkit is the big talking point when it comes to Zomato. What is your take?
See, definitely. I think Zomato's fortunes have certainly changed with the progress in the quick commerce side of business. And if you look at the revenue contribution, I think out of nowhere, quick commerce is almost now 24%. And that is the business that probably the markets are looking at in terms of major scale and better growth, even as compared to the food delivery business, where the gross order value have kind of stagnated since long. No, that's also doing reasonably well for Zomato, but the quick commerce business, I think that is something where they've done extremely well. Recently, I think the stock did correct with the news of the major player like Reliance entering into quick commerce. And talking of these short-term delivery times, I think that has kind of spooked the short to medium-term sentiment at Zomato. But our sense is this is the type of business that Zomato spent a lot of money on to grow, and more importantly, I think the brand equity that it has will help them to retain their market share, and probably will take a lot more time for player like Reliance to scale up this business, and they'll have to definitely burn a lot of cash. They do have that, but I think Zomato will improve its unit metrics, which will help the valuations to sustain.
Okay, all right. Gentlemen, hold on. There's an important update coming in on Navin Fluorine, and it is very important because the company has gone ahead and appointed a new managing director for the company, Mr. Nitin G. Kulkarni. And remember, it's important because Mr. Radish Welling, he had quit the company last year and his last day was 15 December 2023. And since then, there was no update on the new MD. And 6 months after he left, there is an update which is coming by. And the street was quite worried who would come over and take as the MD and CEO position for Navin Fluorine, because remember, the earlier MD, that is Mr. Radish Welling, led to the capex growth, led to the growth that the company saw in last couple of years, and that's why there was a worry. Additionally, there was a slew of senior management exits that the company saw as well. So Street was quite worried what happens to Navin Fluorine when it comes to the MD and CEO position. But right now, there has been an update, and it was a very important, it was an overhang that the stock had for the longest time, because remember, the day he announced his resignation, the stock fell 20%, and since then it has been underperforming. And right now there's a sharp spike on the stock because it's definitely a positive news. In the press release, the company says he brings to Navin Fluorine over 3 decades of rich experience across the specialty chemicals value chain, specifically covering fluorochemicals and CDMO. He is a highly respected leader with a proven track record of driving growth, establishing new business verticals, manufacturing excellence, excellence and execution of large projects. His last role as executive director of OC Specialty for over a decade. He played a role in conceptualizing and establishing OC Specialty as a leading global player in specialty chemicals and the CDMO space as well. So, very important update coming in from Navin Fluorine, and definitely the street reacting accordingly as well. 5.5% higher on the stock. So, yes, that's a positive news coming in on Navin Fluorine. Let's move on now. Rajat Arora is writing to us from Indore. He wants to know when should he invest in HDFC Bank, and also asks which stock is better to invest in, HDFC Bank or SBI. Well, Parthiv, that is definitely a very interesting question. What would you suggest here? Because both these stocks are doing well now. SBI at a record high. HDFC Bank, after its underperformance in Q3, is seeing some comeback.
Oh, yes, absolutely. I think HDFC Bank has underperformed for many years now, and especially after the merger with HDFC Limited. I think the prospects are not looking extremely bright in the short term, but certainly I think it's a fantastic franchisee for a long term. And more importantly, as and when they improve their metrics, especially the credit deposit ratio, which has gone up to almost 105%. They have improved that in the last few quarters, but I think pre-merger HDFC Bank was sitting at around 85% of credit deposit ratio, and which is where I think they tend to do extremely well. So it will take some time, but I think the synergy benefits will pan out over the longer run. And that is where probably HDFC Bank with this underperformer is, I think it's quoting at around 2.6 times price to book multiple on an FY26 basis. And historically, if you see in the last 10, 20 years, I think HDFC Bank has never quoted so cheap. And it's an FI favorite stock. We've seen a lot of FI selling taking place of late. As and when they come back, probably hoping for the fact with a good mandate, FI buying coming back, HDFC Bank should outperform. No doubt, SBI, the way it has moved today, almost 10%, I think has done stupendous well over the last 2-3 years, but probably a lot is baked in there, and I feel that now would be a time to start accumulating HDFC Bank.
Okay, all right. What about you, Ruchit? Between the two, which is looking better technically?
So frankly, a bit difficult question to pick up technically, because if you look at HDFC Bank, that it seems that the price-wise corrective phase is behind us for the stock. A lot of relative underperformance has been seen within the banking space, but of late the stock has started forming a high top, high bottom structure, which are signs of an uptrend. And on the other hand, if you look at SBI definitely has been showing a good outperformance, and it is also continuing its uptrend, which is again supported by very high volumes. So I think both the stocks should do well in the short to medium term, because even the banking index is looking quite positive and being an heavyweight. So I would recommend to take a partial exposure in both the counters rather than choosing any one of them.
Okay, all right. Thank you for that. But let's slip into a short break. As we do that, let's listen to a whole host of market veterans on where they see the market headed from here post the election result.
I think it won't matter beyond maybe plus minus 0.5%, because the market's main interest was that the same management is there, that sort of the same policies are there, the same thrust is there. Most of the ministers are the same, the railway minister, this minister, the oil and gas minister.
So he has set a goal of 400, up ki bar 400 par. So if by chance actually this happens, all the short sellers, and I think the mood of the nation, and this is one election which is being watched all over the world. It's not only about what we are going to do. So this is a proper global event right now, and these things will sink very slowly. And we should not forget other things are also happening, in the sense that your GDP numbers just came day before or something like that, which is way beyond, almost 100 basis point higher than what the economists were saying. So a lot of things are coming together to say that this party which is starting with declaration of result is not going to be over just in a day or two. There could be correction, there could be selling by FIs, whatever. But I think it's a much longer party and larger party. I mean, larger for longer kind of party it is.
So I think there is significant opportunity for wealth creation over the next 5 to 10 years. That if you are willing to take, because you are late in the party, if you're a new buyer, if you're an old buyer, the choice is very clear that you have to be staying with the market, and you have to staying with your portfolio, you have to staying with your investment. But if you're a new buyer and wanting to put new money in the market, then If you look at immediate making money, that is going to be tough because you're coming at 23,000 Nifty and that's not going to be easy. So if you look at next 3 years, if you start to look at 2026-27 from earning perspective, then you can find a lot of investable ideas. One, financial sector clearly looks like a very, very good risk reward from my perspective.
Going forward, next 5 years, when we look at if the economic growth continues to be in high single digit in real terms, call it 6 to 8%, and nominal GDP is in low double digits, profit cycle is on the up move, you should have base case low double digit, call it 11-12% kind of earnings growth. And if the profit cycle gains further momentum, we can approach mid-teens, in which case earnings can double over the next 5 years, and markets, if it remains where it is in terms of multiples, which while higher than most of the world, it is not unusual, it is not uncharacteristic of what India has been historically. And so we can see a market again, approaching a double over the next 5 years.
Welcome back. You're still tuned into Your Stocks. We have with us Ruchit Jain and Parthiv Shah. They're answering all your stock-specific queries. Let's get to the next one now. Ramesh Raj Gopalan is writing to us from Chennai, holds 5,000 shares of GMR Airports at 73.5 rupees a share. Wants to know the prospects of his investment. Ruchit, let me come to you first. Tell us technically, how does this stock look?
Well, we have seen some consolidation since mid-Feb in the stock, but we have not seen any kind of price-wise selling, volume-based selling in this entire consolidation phase. So this just seems to be a time-wise correction within an uptrend. The stock has very strong support base in the range of 75 to 78. Until that is intact, one can expect some good returns in short to medium term, and technically retracements of previous correction indicate possible targets around 102 to 105. So my advice would be to continue to hold on for possible targets of 102 to 105.
Okay, and what about you, Parthiv? How is the stock looking fundamentally?
So we definitely like this business. And if you see Q4, I think the EBITDA grew by almost 2.8 times year on year. And if you look into the granularity of the numbers, the EBITDA growth was almost 70% year on year, which was just on the back of passenger growth of 19%. Goes to show, I think, what a fantastic business model airport handling companies have. And more importantly, I think they are also going to expand and do a lot of debottlenecking in terms of capacity addition at the Dial Airport, the Delhi airport, where the capacity will go up by almost to almost 100 million passengers handling. And also the Goa airport has been doing extremely well for them. There, the growth metrics have been very good from the low base, along with the Hyderabad airport. And even they're talking of expanding the Goa airport from 4.4 million to almost 7.2 million passenger handling. And more importantly, I think this company also tends to benefit from the non-aero business, which has been growing up well, especially like some food and beverages, the hotels, and also the warehousing and logistics. So I think a lot of operating leverage can kick in going ahead. And probably this is a contender also going ahead to bid for other airports. And overall, I think this business model is looking good. So certainly suggest a hold.
Okay, all right. So that is on GMR Airports, looking good fundamentally as well. Move on to the next one. Prashant Rajput writes to us from Rajasthan, holds 21 shares of Dalmia Bharat at 1,998 rupees a share. Wants to know the future prospects post-elections. Let me come to you, Parthiv, because Q2 usually is known to be the one where we do have some I would say some relaxation in terms of construction activities because of rainfall. But what is the cement pack looking like to you right now, and particularly the stock?
See, I believe that the cement pack should do well, and especially as you very rightly pointed out, should do better in terms of the numbers of volume growth and margins in H2, because post-monsoon we generally see a pent-up demand. And this time, I think post-monsoon, the time frame would also coincide with the July budget, which will be more of a mainstream budget. Last budget, I think the budgetary allocation in terms of infrastructure was around 11 lakh crores. Let's see if there's any more positive surprise. We saw that the fiscal deficit number was looking better thanks to the fact that government received the 2 lakh crore dividend from RBI. So I think will this time, I think in this new term, if at all it were to materialize tomorrow, I think will the government front load the capex? In which case, I think cement will be a very good beneficiary and very good proxy to play. The good news is that despite the fact that the prices have stayed low, maybe also because of the election impact and the demand, also some of the projects are slow, but the raw material input costs have gone lower, especially the pet coke and fuel cost, which has helped a lot of these companies to sustain the EBITDA by ton. Dalmia Cement is the fourth largest player, and they are also upping their capacities. And with the capacity utilization of around 60-65%, there is a scope for more demand and volume growth kicking in, which can kick in operating leverage. So I'll suggest a hold on this stock.
Okay, all right. Let me go across to the next question. Ruchit, first you take it up because we have a query coming in on shares of Bajaj Finserv. The investor has bought it at a price of 1,683 rupees a share. He's a long-term investor and wants to know whether to hold or sell. What is your suggestion here?
Well, in this 1 years of uptrend, we have seen a relative underperformance on both Bajaj Finance and Bajaj Finserv. But it seems that it's more of a time-wise corrective phase which is going on. The previous all-time highs in Bajaj Finserv was made in October 2021, and post that we have not seen any kind of trended up move. But the lower end of the recent trading has been a support of around 1400 to 1450. So it seems that the downside seems to be limited from here on, but there could be some more time-wise correction before we see any kind of breakout from this long consolidation. So if your time horizon is a bit of mid to long term, then I think you should continue to hold on to the stock. The downside seems to be very limited, but should be prepared to see some more time-wise consolidation.
Okay, all right. What about you, Parthiv?
So in my sense is the story in Bajaj Finserv is pretty similar to that of HDFC Bank. I think it is also a FI kind of a favorite stock. And if at all the FIs were to come back this year, I think we will see some valuation upside in Bajaj Finserv. Because I think if we look at all the three business segments, because Bajaj Finserv is generally valued based on the sum of the part valuation. First, talking about the general insurance part, I think that has been doing reasonably well. The combined ratio is at around 98%, which is one of the best in the industry. The life insurance arm is also doing well. The AP growth has been reasonably good, and the VNB margins are holding up at around 16-17%. There also we are upbeat on the longer horizon. And most importantly, their stake in Bajaj Finance, and Bajaj Finance numbers, despite all the challenges they have to face with RBI action, are doing well. So I think it's a long-term stock, it's a portfolio stock, and certainly the financials have underperformed, but whenever they outperform, stocks like these will definitely lead the pack.
Okay, all right. Thank you, gentlemen, so much for joining us today and taking you those queries individually. With that, we'll take your leave on this edition of Your Stocks. But do remember to email us your queries and we'll address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.